Old versus new tax regime, or old versus new income tax structure. 3 steps to know which tax regime or tax structure is better for you, old or new. It's high time for you to fill up your tax declarations and opt for old or new tax regime provided in the current year budget by Finance Minister. Let's talk about a tool that can assist you in knowing your estimated tax liability or which tax regime is better for you. Check out the below tool or calculator provided by the Income Tax Department. Once click on the link provided in the description, you will be landed up to the page. Now, we have 3 quick steps here to know the estimated tax liability for us in the new tax regime and in the old tax regime. For example, the first step is know the age. Once you will enter your age here, then you have to enter your estimated annual income. Let's say that your estimated annual income is 15 lakh. Next is the exemptions and deductions. The exemption and deductions are 2,40,000. When we talk about exemptions and deductions, these are the exemptions and deductions which are available to you under different sections of Income Tax Act. However, we have conducted a detailed research on it to make you understand that which exemptions and deductions are available for you in the new and the old tax regime. Now, once you enter the exemptions and deductions here, you have to do the compare. See, now you have the tax payable as per old tax regime, you have the tax payable as per new tax regime, and the tax benefit available to you under which regime. So this will make you understand that which tax regime is better for you. Now coming back to the research, welcome to CaConsult research. Now you will have below questions in your mind. What are the exemptions and deductions that cannot be claimed in the new tax regime? For a person who is covered under a salaried class, have few very common exemptions and deductions. First is house rent allowance, second is children education allowance, third is standard deduction, fourth is interest on housing loan, and the fifth is chapter 6A deductions, which will include your LIC, your Mediclaim policies, your mutual fund investments, your tax saver FDs, and other. Kindly mention some of all these exemptions and deductions in this bar, which is given as exemptions/deductions. It means that these deductions are no more available to you in the new tax regime. The other question that may pops up to your mind is how you should choose the new tax regime and plan your income taxes. Choosing tax regime at the beginning of the financial year is essential to ensure smooth financial planning during the year. Please compare income tax under the new tax regime with the old tax regime and know your savings or which tax regime is better for you. Once you choose the tax regime at the beginning of the year, the investments and TDS or advanced tax payable calculations are made accordingly. This was the CaConsult research. Please like, share, and subscribe to our channel below. Thank you. Stay safe and healthy.